Hope everyone's doing well. Thank you for watching the video today. This is Josh Elbow. The cost of this video is to like the video if you're watching it on YouTube, potentially subscribe if you're getting value out of the channel. The whole point of the channel is to show you guys ways to generate subsidiary income outside of having to have a job, because what fun is that unless you absolutely love your job and you're just loaded so you don't need anything else. But why not always be looking for expansion? But after the last video being down a negative 112 trading I'm kind of excited about these two. When it comes to trading, what Zip Trader Charlie's YouTube channel talks about is that you want to make good trades, not trade for money. If you trade to make money, you tend to lose. If you trade to make good trades, you tend to be more profitable in the long term. And because we're playing this as a long-term game, the focus isn't to make money. Well, the focus is always to make money, but the focus is to make good trades, because making good trades inevitably will make good money. Kind of like in business, if you focus on making money, you tend not to make money, but if you focus on bringing value long term, you tend to make money. So not that like the focus is necessarily this, but the next two trades after being down 112 brought a nice $300 profit. So I'm just going to be going over TQQQ, which is the leveraged NASDAQ fund ETF in this video, and then I'll do BOIL in the next one. So on October 3rd, 2019, I bought the TQQQ, which is a NASDAQ 3X leveraged ETF, bought 40 shares at $57 a piece. I was willing to lose about 120, although I was, is that what it said? I think I sold out early. Willing to lose 120. If I was, probably had this take profit set for like 200, but it might have either shown signs of a reversal, or I just wanted to take the profit because it was a good chunk to get out of. So I sold out at 61-ish, just 60.91. $57 a share on 10.3. So we'll pull up the TQQQ, Pro Shares, Trust, Ultra Pro, Triple Q, ETF, Triple Q's NASDAQ. So on 10.3, right in here, bought it at, what did we say we bought it at? $57. 10.3, 57. So this was, you know what I did? This was actually a bad trade, technically. I bought on 10.3 at 57, which is about here. The reason that I bought this trade is because 100% of the time, literally 100 fudge, 100% of the time, if the NASDAQ leveraged fund is oversold, it bounces back to a high overbought. Same thing here, oversold, overbought. Any reaction in the stock market is an overreaction. Same thing here. Oversold here, super low. Not necessarily that I went overbought till back here, but immediately shot back up. So we look at the gain here, 20%. Look at the gain here. That's why I have these lines already in place. The gain here is 27%, not including if we really wrote it out. There's a 50% return there, which might not necessarily be realistic. If we bought this one here and wrote it out, 12%, oversold here, and another 25%. So I would say right now might be not necessarily a good time to short, because I don't know what the market's going to do, but every single time we've seen it be oversold. Same thing I did here at 57, bought at 57. I sold out early too, so I bought at 57, let's say, right here, and sold out at 60. I only had necessarily a 5%-ish gain. Could have wrote it out for another 27%, but there was, if I would have held for an extra dollar on that 40, I could have, but the point isn't that I could have, because when we're trading, we have to pretend that we don't know what's going to happen after this point. Where are we at? Where's the 57? This is late, right here. So we have to pretend like we don't know if this could go down or up or down after. We already passed the 55 mark on the RSI, and it never confirmed. So this was more of a risky trade. It was right around the 180 SMA line, but I was purely trading this based on the fact that every single time that it hits oversold, it had at least a 10% plus gain back on the back up like the RSI. So that's why I bought this trade, and it was profitable. I guess some people could call it risky, but I didn't see any risk. even if we look at the, let's look at the 3-year. I don't know if we're going to be able to see anything on this. Let's look at the 1 year maybe. But every time oversold, shoots up. Oversold, shoots up. Oversold, shoots up. Even almost here, this is as far as it got down to the 40, which some people set their RSI bottom for oversold at 40, shoots up. It doesn't really break below this line. If it does break below this line, it shoots back up. Same thing here, a little bump and then comes back up. So that's why I bought this trade. It was a good trade from a profitability standpoint. I liked it just because it looked very, very clear to me that this is what the market wanted to do, and I wanted to listen to the market, so I wasn't going to fight it. Thank you for watching the video. If you have any questions about any type of subsidiary income generating, let's say anywhere from $12,000 a year to $200,000 a year, I think I can get you to that point. Thanks for watching. I'll see everyone in the next video.